All right, guys. So I'm gonna put a lot of stuff together, kind of in this, and show you guys a few different examples. Today I traded Apple. Um, I'm gonna give you guys what I do, what I look for before the market opens, after the market opens, how I manage the trade, and just kind of let you know the whole thought process behind everything. Um, so first, this is yesterday or what's today? Monday. So this is Friday's price action. What you're seeing here is Friday's chart. The next candle you see will be Monday's open, will be this morning's open because I don't use after hours, I don't use pre market. So the next candle you see will be Monday morning's open, right? But what I do first is I get the last 45 minutes of price action. So what this is the last 45 minutes of price action in this gray bubble here, or box I'll show you here. At the very bottom, you can see the number 15, 16, 15, 14. That's where we need to be, 15, 14, because we want to highlight this last 45 minutes right here of the price action. Boom. Right there. We need to highlight the highest point of it and the lowest point of it. So of the last 45 minutes, you find the highest point. So you start over here, the 315 right here, and you find the highest point, which is here. Right, so I find 315 here. Then I make sure it's up at the highest point, which is here. Boom, up top, and I make sure it's at the lowest point, which is here, this white candle here. But now we need to include the SMAs inside of this box. So this blue 200 SMA and this orange 20 SMA, we need to include that in our box. Boom. So we need to bring that down a little bit and make sure it's in the box just a little bit. Now, this is what I do every morning before the market opens. I'm marking this out on my chart. This is called the Fab 4, the Fabulous 4. The high of the last 45 minutes, the low of the last 45 minutes, the 20 SMA of the last 45 minutes, and the 200 SMA of the last 45 minutes. All of those four things need to be highlighted together inside of a box. The tighter, the better. You don't want a box like this. You don't want a big, long, square, tall box. You want a rectangle. Like this, a tight box. Right? So basically, all I do is find the high, the low, the 45, and the 20 and the 200. After that, I wait on the market to open. So that's it. This is all the technical analysis I do prior to the market open every day. I just find this box. That's it. Once I do that, I wait on the price to open. If it opens above this box, let's say we get a candle right here like this or something, boom, boom, my bias is long for the day. No matter the color of the candle, doesn't matter. My bias is long. If it opens below this box, my bias is short. That's it. That's all. That's all I look for every day. So this helps me identify my bias. Right? Now after we open, let's see what we got. Let's see what we got after the open. So we're looking for an up or a down. Sorry, that's not the open. Here it is. This is the lowest point right there. Boom. Sorry. Boom. I was a couple candles short, but anyways, okay, boom. So right here, what do we see? We see the open is up here. It's a red candle or a white candle on my screen, but it's opened above the Fab 4. So that means my bias is long, even though this is a white candle, I don't care. My bias is long. Right? So now I have to wait on an entry event. The entry event that I look for is a color change engulfing at or near a trending 20 SMA. Let me give you some examples. Right here, you can see this 20 right here is starting to curl and point upward. And it's starting to trend away from this 200 down here. I'm taking note of that. whenever I see these couple candles, I'm taking note that this 20 is starting to point upwards and trend upwards, right? So I keep waiting, keep seeing what some candles want to do, keep seeing what price action does. Boom. We get a nice move here. This lets me know that this Fab 4-ish area is strong and it's acting as a support, right? Because we didn't get any follow through to the downside. This all was acting as a support area. These green candles here, none of them fell. So it shows strength in the market. It's confirming my upside bias. Okay, but I'm still not in yet. Even though I see this, I'm still not in, right? So right here is pretty much just confirming the direction that I think it's going to go at this point. So now I'm still waiting on on an entry event. So once I see this, I'm still waiting. My 20 is trending up. That's awesome. I have a white candle here. Boom. This right here. Once you have a white candle and the following candle after is an opposite color, which would be a green candle, and it breaks the high of this white candle like this, that's an entry right there where this arrow is. Boom. You enter into this long to the upside. Your stop loss would go directly underneath this entry event model. Boom. So your stop loss would go maybe here, here, wherever your risk you really want to do. Your risk will be up to you, but this is where your stop loss would go. Right? So like right here, let's just say let's place a stop loss like right here. Place it there. Your entry is here. Let's just say it goes directly underneath the entry event. And I mean, you could bring it up a little bit. You ain't gotta have it that low, but this is where you would enter. This is called a color change engulfing pattern, right? We only buy this when price is coming from a narrow state in the SMAs. You see how the 20's close to the 200 right here? Boom, boom, boom. Moves happen whenever the 20 and the 200 are tight. Whenever they're narrow together, moves happen, right? So whenever you see a break, a 20 trend out of a narrow state up and away from a 200, right? After the positive open on a Fab 4, you get a color change entry event right here while a 20 is trending upward. This is a great entry to the upside. Boom. Right? So the entry is the blue line. The red is the stop loss, which was never hit. Right? So once you enter on this first color change right here, once you enter on this first color change, your stop goes directly underneath and you ride this 20 all the way up and you do not sell until price breaks below this 20. Once it breaks below this 20, you fully get out of the position. Right, but this is what I look for every day, but all of these things have to align. I have to have a tight Fab 4 that's narrow in state with the SMAs. We have to get, if we're going long, we need the 20 to be above the 200. We need it to start trending up and away from the 200. We need the open to be above the Fab 4 if we're going long. And then we need a color change entry event near a trending 20 SMA. And then you ride that up until price starts to break that 20. That's when you sell. That's when the trend, that's when the momentum will stop. Because we're just catching this move here. This is really all we want to catch. This tight breakout move from this tight SMA state. Right? And the bias, the Fab 4 helps you confirm that. You know, as an example, AMD this morning Fab 4 was here, marked out the last 45 minutes. We included both of the SMAs the last 45 minutes. It's a rectangle, so it's not a tall square, the Fab 4. It's not like this. It's a rectangle, so that's good. Price is tight. SMAs are tight. We're going short here, so the 20 needs to be underneath the 200. Once we see it start to trend down away from this 200, out of this narrow state in this Fab 4 here, out of this, that's when we wait on a what? A color change entry event, but to the downside. So now we wait for a green candle to take out, a white candle to take out a red candle, a green candle, then we enter short. So right here, right, we have an open. Our bias is short, is down, because we opened below the Fab 4. So we open below the Fab 4 right here. That means our bias is short. So now all we need to do is wait on our 20 to start trending down away from the 200, and then we're going to get a color change entry event to the downside. What that is when a white candle takes out the green. So did this white candle here take out the previous green candle's low? No. This white is a little bit away from this, so you don't enter here. This white right here, this candle, the candle before it is white. It took out the low, but it's white, so I'm not entering here either. Then this next candle, boom, that's a green candle. The candle after it is a white candle. Did that candle take out the low of the green? Yes. Boom. It did. So that's where you enter right there. Soon as you see this, you enter. You place your stop loss a little bit above the entry event. This is the entry event, so you place your stop loss here. This is your entry event. This is your risk right here. Boom. And then you ride this to the downside. Stop loss never being hit. Never being hit. But this is an example of the Fab 4 giving you direction to the downside. Right? So this is another example. I didn't take this trade today. I was in the Apple one that I just showed you. But this is another example of the bias being correct, the entry being correct, the move profiting. Right? We'll do one more for you guys. Try to keep it relatively simple. But relatively short. I'm sorry. This. Let's see. Just showing you guys this. Okay, so this is Meta here. So you can see this is the prior day right here. But look at the price action, right? You see how the 200's pointing up, the 20's trending down. We don't have a tight SMA. We don't have a tight. It's wide across. It's wide from each other. You see how we have that? We want more of a tight SMA, but let's just do it for, poops and giggles. We find the last 45 minutes, which is here, to the last open, to the low of the 45 minutes. We include the SMAs in that last 45 minutes. We want them to be straight and close together, not trending down and up like this, but just for the sake of direction, I'm showing you guys this. That's really the only reason I'm showing you guys this. It is really just direction. Boom. So once you get the open is up. So we're looking for natural entries to the upside. We're looking for color change engulfings to the upside. So this next candle here, no entry. We stayed above the Fab 4. We tested a little bit inside of it here and then bounced right back up. So this lets me know that strength is still here. So it's confirming my upside bias with this open and this getting pushed up here. Confirming my upside bias. So now I'm just waiting on a color change entry event. I'm waiting on a green candle to break above the white candle before it. When that happens, I need to make sure that the SMAs are in the right location. I have to make sure the 20 is above the 200 trending up and away, and the 200 is below the 20, right? So right here, we technically got one right here, barely. This green barely broke above this white right here, and it would have been a valid entry because you place your stop down here, and you would have made the money here, so you would have been good. But I wouldn't have taken this because the SMAs were not where they were supposed to be. They're crossing, so it's not terrible. I could see taking it, but it's better to have a more of a direction in the SMAs. So I would like to wait for the next one, which would be this one. That one there. Because at this point, this 20 is trending up from this 200. It's already crossed. It's not in the process of crossing. It's already crossed. So I could see this one being a better entry, but this one is still valid and you still could have profited no problem. But this one's better. The break of the white is clearer, and the SMAs are clearer as far as trending. So that entry is better. But anyways, you enter here, you place your stop directly underneath the entry event, and then you ride this 20 all the way up. Once price starts to really break below this 20, that's when you exit. But this is just an example of showing the direction, the strength, the trending of the 20, the entry event, and then the profit. So I'm just three quick examples trying to show you guys exactly how I mark the charts up before the open and what I look for as far as entering a trade and exiting a trade. That right there is the bread and butter of what I look for every day. 2-minute time frame. This is all happening on a 2-minute time frame. And no pre-market, no after hours. I trade the same 6 to 8 stocks every day, large cap tech stocks. Don't deviate from the plan. Stick to the plan. Stick to the script. Stick to your stop loss. Stick to your take profit. Stick to all of that, and you will be good. But yeah, just wanted to give you guys some quick examples of what I traded today, and also how I just look at the markets and view my trades every day. That's exactly what I look for in my day trades. Yeah, so just wanted to show you guys that, and if you have any questions, just reach out or comment.